Welcome to the Explainer. Let's just dive right in, shall we? Today, we're unpacking a massive, kind of mind-blowing shift happening in the global economy. We're going to explore exactly how crypto and blockchain are stepping up to revolutionize financial access for literally millions of people worldwide, people who, frankly, have been left behind by the traditional system for way too long.
Get this number in your head, 1.4 billion. That's the staggering number of adults on this planet who currently have zero access to a formal bank account. None. We're talking about a massive chunk of the global population just completely locked out of the financial system.
I mean, take a second and actually imagine living in a world where you just can't open a basic bank account. A reality where you can't securely save your cash, you can't get a loan to kickstart a business, or, well, you can't even pay your electric bill online. For billions of people, that's not some thought experiment. It's just their everyday reality.
So who exactly are we talking about here? Well, first, we have the unbanked. These are folks with absolutely no access to formal banking services. Everything, and I mean everything, runs on physical cash. We're talking about hardworking farmers in rural Kenya or daily market traders in Nigeria. They're hustling, they're participating in the economy every single day, but they are totally excluded from formal financial institutions.
And right next to them are the underbanked. Now, these are people who might technically have an account somewhere, but they can't really use it. They're getting hit with crazy high maintenance fees, ridiculous minimum balance requirements, or they just have zero access to actual credit. So even with basic access, the traditional system is still leaving them out in the cold. To put this in perspective, let's look at two totally different realities. You've got person A. They're banked. They're swiping cards, doing digital payments, securely growing their savings, maybe getting a business loan to build wealth. Then you have person B. They're completely reliant on cash. That means a constant risk of theft, right? Plus, they're financially isolated. Over time, the gap between what these two people can achieve just gets wider and wider. Now, you might be wondering, why is traditional banking failing millions of people? Well, at the end of the day, banks are businesses, and setting up shop in certain remote areas just isn't profitable for them. Geographic distance is a huge hurdle. Imagine having to travel 50 kilometers just to open a basic checking account. Adding a lack of formal ID documents, those steep monthly fees, and minimum balance requirements. If you're living paycheck to paycheck, those aren't just inconveniences. They literally make getting an account impossible.
Which brings us to the crypto solution, borderless and always open.
The incredible thing about blockchain networks is they don't need physical buildings. They're on globally 24/7, 365. All you need is a smartphone and an internet connection. And I love this comparison. Remember how in a lot of emerging markets, they never even bothered laying down copper telephone wires? They just skipped the tangled cords entirely and leapfrogged straight to mobile phones. Well, today, those exact same communities are doing it again. They're skipping the physical bank branch and jumping straight into digital wallets. So, what are digital wallets? Think of them as the new bank accounts for the unbanked. It's basically an app that connects you right to a blockchain. And the best part? Zero paperwork. Seriously, no driving to a branch, no hunting for a utility bill to prove your address. It is a direct, fully portable gateway to the global economy, right in your pocket.
But to really grasp this, we gotta talk about the most famous rule in crypto. Not your keys, not your coins. See, a traditional bank holds on to your money for you. But with a non-custodial digital wallet, you hold what's called a private key. Think of it like a master password. You and only you directly own and control your assets. It's super empowering for sure. But, and this is a big but, it also means you are 100% responsible for keeping that key safe. Let's see how this actually fixes a massive real-world headache: remittances. Migrant workers send billions with a B back home every single year. But the traditional system? It's a nightmare. First, the sender deposits the cash. Then a bank processes it. Then a bunch of middlemen step in to verify it, all taking their little slice of the pie, of course. And finally, maybe days later, the money actually arrives. It's slow, and it's just unnecessarily complex.
Let's put some hard numbers to that. Say a worker is trying to send $100 back home. Using the old system, they might get slapped with a $10 fee, and it takes days. The family gets $90. Now run that same $100 through a crypto transfer directly on the blockchain. We're talking maybe a $1 fee, processing in minutes. The family gets $99. That kind of efficiency is a total game changer. It literally keeps money in the pockets of the people who need it most.
Let's make this a bit more real. Take Sarah, a freelance graphic designer based in Ghana. She's got clients in Europe, North America, all over. By choosing to get paid in crypto, Sarah totally bypasses those agonizing processing delays and crazy currency exchange fees from her international clients. It just completely simplifies how she works in the global economy. Or look at Michael, a remote software developer over in Nigeria. He bypasses the traditional banking friction entirely. His European bosses pay him directly into his digital wallet. Bam! The funds are there in minutes, the fees are tiny, and he has immediate direct control over his own income. No middlemen.
Okay, I know what you're thinking. The elephant in the room here is volatility, right? Crypto prices can go wild. Well, that's exactly where stablecoins come in. These are digital assets specifically designed to hold a steady value, usually pegged right to something like the US dollar. Think USDT or USDC. For folks like Sarah and Michael, stablecoins are huge. They provide a safe, predictable way to save their money and actually budget their lives without panicking over sudden market swings.
But let's do a reality check. Risks, scams, and limitations.
Look, as amazing as this tech is for financial inclusion, it is absolutely not a magic wand. There are real serious risks we have to talk about. First up is just the sheer stress of volatility with things like Bitcoin. Imagine your savings are worth $120 today, they crash to $90 next week and jump to $150 next month. A day trader might love that roller coaster, but for a family just trying to protect their daily savings, that kind of whiplash can be absolutely devastating if they aren't fully educated on how it works.
And honestly, the dangers go way beyond just the market dipping. This space definitely has its share of bad actors. You've got fake investment platforms promising the moon, classic Ponzi schemes, and phishing links just waiting to drain your wallet. Plus, there's that intense personal responsibility we talked about. If you lose your private keys or your 12-word seed phrase, which, let's be real, is way harder to remember than your mother-in-law's birthday, there's no 1-800 number to call. Your money is just gone. Poof.
We also really need to acknowledge the digital divide here. If we want true financial inclusion, we have to clear some major tech hurdles first. I mean, people need smartphones, they need solid internet access, and, most importantly, they need real financial education. Just dropping the technology in someone's lap isn't enough. People have to know how to use these tools safely to actually get ahead.
So, where does that leave all of us? Honestly, the future probably isn't about crypto just completely wiping out traditional banks. Traditional finance still does a lot of heavy lifting. Complex business loans, regulatory protections, professional advice. But blockchain brings that borderless access, the lightning-fast transfers, and true direct ownership. The reality is, the future is likely going to be both of these systems kind of working together, building a much more robust and inclusive global economy.
Which wraps up our explainer for today. But I want to leave you with something to really chew on. Will the future of finance be built by the traditional banks, or will it be built by the unbanked themselves using these decentralized tools? It's a massive shift in how global power works. The unbanked aren't just sitting on the sidelines being forgotten anymore. They're actively building the future of money. Thanks so much for hanging out and exploring this with me today. Keep learning, and I'll catch you next time.